Stock risk tolerance is vital in investing, reflecting an individual's capacity to handle losses and market volatility. Key aspects include 1. Understanding risk tolerance. Assess your psychological and financial tolerance for market fluctuations. 2. Factors influencing risk tolerance. Consider age, income, investment goals, experience, and market knowledge. 3. Assessing risk tolerance. Use questionnaires and financial planning to gauge your risk level. 4. Types of risk. Understand market, company-specific, sector, and interest rate risks. 5. Risk tolerance and asset allocation. Choose conservative, moderate, or aggressive strategies based on your risk tolerance. 6. Managing risk. Employ diversification, regular rebalancing, and hedging strategies. 7. Behavioral aspects. Be mindful of emotional decision-making and overconfidence. 8. Review and adjust. Regularly reassess and adjust your investment strategy as your risk tolerance changes. Conclusion: accurately assessing stock risk tolerance is crucial for creating a suitable investment portfolio and achieving financial goals.